What is happening, traders? This is your boy, the one and only Mhlabe the Goat. We are back into my channel. So today we are looking at volatility 75. I just want to show you on how you can master your trades, how you can be able to catch another trade if you have failed the first one. So let's say you had a trade and then it goes against you. So I just want to show you on how you can still catch that trade. You understand? I just want to show you on how you can still catch that trade because yesterday I had this trade. This was volatility 75. We are looking at the volatility 75. I had analysis. They were like this. They were like this. Okay. So when you look at it, you can see that I entered after the break, which was here. The market was somewhere there, and then anticipating to come down here, right? And then the market went against. So what you can do is that you have to learn to shift your trend lines because you might find that this trend line was not that valid. You understand? Or the market was just shifting. That's what you have to understand. The market can shift. So let me delete this. The market can shift. So here the market shifted. It gave me another touch, which was there, which was here, and then here as well. So when I saw this, I saw it that, okay, the market has shifted. All right. I saw it that, okay, now the market has shifted. If I was still in the market, I was going to enter my trades after the break here. After the break, after this break, anticipating to come below here. But just because I was not in the market, then I didn't trade it. Just because I was not in the market, I didn't see it. So this was something that I could say we would have been anticipating for if we had seen it that the market had shifted. So when I saw it, the market was here. It was here when I saw it. It was creating this candlestick here, this candlestick. So I was now strong because why? I had a break and retest. I had this break here, and then we had the market was currently in a retest. So as for those that I was with on my Zoom session yesterday, I told them that we are just waiting for a candlestick to close below or for the market to give us a bearish engulfing candlestick. So if we were to enter here after the candlestick closed below, then we would have entered here and then the market would have went up a little bit and then we come back. But that is not safe, guys. It is not safe. That's why I said we must wait for a bearish engulfing candlestick. You can see this is a bearish engulfing candlestick with we had multiple confirmations like this candlestick here, this is a doji, and then even this one, this is a doji. So like we had that confirmation, and then we had this M formation. This was M formation, you can see, and then we had this bearish engulfing candlestick. That was about I think we had a break, we had a retest, which was the first confirmation. Okay, I can say this is the second because we first had a break, which was the first, and then we had a retest, which is the second, and then we had a double formation, which is the third, and then we had these two dojis, which is the fourth confirmations, and we had this bearish engulfing candlestick. You can see that after this bearish engulfing candlestick, the market went straight to the downside. You could see the market went straight to the downside, and then since we were anticipating to come here, then look at this. The market was about to hit our TP, but just because of load shedding, I didn't enter. I didn't see this double top because of formation. You understand? I didn't see it. So because of load shedding, not because of formation, because of load shedding, I didn't see it. So I missed this trade because of load shedding. But as for those that I was with on my Zoom session yesterday, they got what I said. I told them they can see. What I said is that we're waiting for a bearish engulfing candlestick, and then after that, we enter our trade. Our stop loss, obvious, it has to be above the previous high or the previous low. So this is the previous high, and then okay, you could see the TP was hit. So yeah, guys, that's how you can master your trades. That's how you can be able to revenge your trades, I can say. That's the only way you can revenge your trades. You don't have to chase. Let's say you could see here the market had broken below, and then we had this, and then it went up. You don't have to revenge trades by taking this as a buy, anticipating for it to break above. No, you don't have to do that. But just because you saw sales at the beginning, because you can see we are having this pattern here, and then we're having this pattern within. So yeah, we're anticipating for sales. We're not going to change our perspective, how we saw the market, but we still have to look for sales. We still have to look for sales. What you have to do is that you have to shift your trend lines. That's the only thing. You have to shift your trend lines. And then you can see I did shifted my trend lines, and then the market was nice. You see. So the advice that I can give you guys is that when you trade, you must wait for a break and retest. You must learn to wait for a break and retest. Once you do that, a break and retest, then that will be cool. So you can see here, I didn't wait for a break and retest firstly when I took the first trade here. When I saw this trade, there was no break and retest, and then just imagine entering here, anticipating. And another thing is that the stop loss was going to be far, guys. It was going to be far. The stop loss had to come above here. So just imagine stop loss from there, entering there, anticipating for this level there, and then just imagine putting your stop loss here. So that's something that you must understand. So yeah, you'd rather put your stop loss maybe after the break or below, before the break, few pips before the break, and then you could see it went up, hit the stop loss. Now you got it, this one, because this is the only way you're going to win, guys. If you just wait for a break and retest, then you are going to win in the market. You can see we waited for a break and retest, then the market went, okay, let me draw these. Let me fix. Okay. Okay. So this is how you can enter your trades, guys. You don't have to enter after the break. No, you don't have to enter after the break. You have to wait for the market to give you a retest. A break. Yes, we had a break and then we had a retest. You can see. And then that's when you can enter your trades going down. You can see you didn't even stay in losses. No, you wait for a break and retest. That's it. That's it. So entering after the break is good because you are taking just imagine taking pips from here until here and then plus the ones that you took from here until here. So it means you will have something like this. So you see, this is the advantage of taking a risk entry. This is the advantage of taking a risk entry, but I don't guarantee that you should take risk entries. No, you should wait for a break and retest. That's when you can enter your trades. I hope I'm clear. You must wait for a break and retest, and then that's when you can enter your trades. So yeah, it's your boy, the one and only Mhlabe the Goat, signing out.